Good morning, all participants. Indian Railway Institute of Financial Management, IRIFM-II welcomes you for online training course for 2A Appendix 2A aspirants. Today's topic is Debt-Head Report and Off-Yearly Suspense Review. And to take up the session, we have Shri K Damodar Prasad, retired Senior AFA, Southern Railway. Welcome, sir, and it's over to you to come in the session.
Thank you, Ms. Benhar. I welcome once again all the 2A aspirants to this session. Once again, I request all of you to go through our presentations, and because the objective type questions from any nook and corner that can be chosen and asked. So therefore, we should be thorough with our code books. Then only we'll be in a position to answer objective type questions in whatever fashion they were asked. So with this introduction, let us start into our today's topic, debt-head report and half-yearly suspense review. Once our accounts are closed, we'll be sending final account current to Railway Board. Once we do this, there is some later part of work will still remain even though financial year is closed. So the later part of work which we'll be doing, we call them as annual accounts. These annual accounts preparation, we will be starting once our final account current is sent to Railway Board. After all, what are all the annual accounts which we will be preparing as a part of annual accounts by railways? Number one, capital and revenue accounts. These capital and revenue accounts will be presented to suit to commercial undertaking activities. As a commercial railway, as a commercial undertaking, what it is doing, so those will be reflected in capital and revenue accounts. Apart from this, one more annual account will be submitted, that is finance accounts. These finance accounts are to suit to the government accounting system. So what government requires to do further calculations, etc. These finance accounts are prepared and sent to Railway Board. This is second statement. Another statement is today's topic, that is debt head report. Debt head report is one of the annual accounts which we'll be preparing. So this is the third report. Apart from that, we also have one more statement of annual accounts which we'll be preparing, annual voted and charged expenditure. That is also part of annual accounts. All these are mentioned in our accounts code, volume 1. However, there is one more annual account which we'll be preparing, that is the most important, and it is completing the cycle of parliamentary control. It is nothing but the appropriation accounts. So with the submission of appropriation accounts, our parliamentary control on railway finances, it will be complete. So these appropriation accounts, these are in detail discussed in our finance code volume 1. So barring appropriation accounts, all other annual statements are dealt in accounts code. So out of the other things, so let us start today. We deal with debt head report. Now, what is debt head report and in which format it will be prepared, and by preparing, what is the advantage which we are gaining, and why at all this debt head report is to be submitted. So these are all the answers which we'll be having. So first of all, so this already I told, So before preparing the debt head report, we require the number one, final account current. Number two, suspense balances to end of the March. Number three, block account. Block account per se, it is not fully required for preparing the debt head report. Only TWFF portion, that is transfer without financial adjustment. So this TWFF portion from block account we need to take, because any balances through TWFA are affected, then we have to affect them, and then that will be the opening balance for the current year. So hence the block account, in the block account, only TWFA portion is required. So hence block account is required, suspense balances to be closed, and we should know what are the value of the suspense balances and number of items to end of March, and also final account current. So with these prerequisites, then we are ready to prepare the debt head report. So now what is the debt head? डेट माने तो लोन, किसी का अमाउंट हमारे पास रहे तो वो डेट हो जाता है, because we have to return that amount. So there are many items which we will be getting from outsiders, from employees, and those items have to be reflected, because government should know how much we are getting as a debt and how much it is getting repaid. So these are all the things which will be reflected in the debt head report. So debt head, it is the balances under debt heads, they are listed out in the debt head report. Now in which format, now what are the debt heads, I'll let you know later. So whatever balances that are available under the debt heads, those will be listed in the debt head report. It will be, in which format it will be prepared? It will be prepared in form A749. All of you aware that A indicates accounts code volume 1, and 7 is chapter 7, and 49 is the para number where this debt head report format is available. So in that format, we will be preparing them. And each zonal railway has to prepare this debt head report in format A749, and then it should reach railway board by 10th September. Please remember this particular date. So by 10th September to railway board, we have to send the debt head report. As all the annual accounts, including our appropriation accounts, are subjected to C&AG scrutiny or audit scrutiny. Therefore, our debt head report also should be subjected to scrutiny by our audit people, statutory audit. So a copy of the debt head report should be furnished to audit also for their certificate. And once they certify the debt head report, that is whatever it is available, or what are all the debt heads listed in the debt head report, they will verify with our records, and then they will give a certificate. And along with that certificate, the railway board should be informed about the certified debt head report by 25th September. So by 25th September, our debt head report audited debt head report should reach railway board. So after knowing this, now Akhir, what is that we do by listing out the debt heads? The report will review the outstanding balances. Outstanding balance, we review the outstanding balances, comparing with what? Comparing with the previous year balances. Outstanding balances, comparing with the previous year balances, and we will furnish explanation for the variations. We will furnish explanation for the variation, and also we will give comment on the efficiency of the balances. what is meant by efficiency of the balances? Efficient balance, inefficient balance, hardcore balance. So these are the terminology which we should know. Hardcore means they cannot be recoverable. Efficient balances, where all the details are available and we can pursue for clearance, then such balances are called efficient balances. Inefficient balances, details are not available, firm details are also not available, and the date in which the amounts were given, those are also not available, due, those were not available. In such cases, we call them as inefficient balances. So, while comparing the current year balance under a particular debt head with the previous year balance in the same debt head, and how the balance increased or decreased. If increased, why increased? What are the reasons? If decreased, what are the reasons? If negative balances are there, why that negative balances? Because something we may not have linked. So such comments, and whether these balances are efficient or not, because Reliable should know, because if it is recoverable, it is okay. If not today, next day, next year you will be doing that. But it is inefficient, then in that case, you will have to go for write-off only. So to have a clear picture of these debt heads balances, whether we are maintaining efficiently or not, a report in the form of A749, we have to send it to Railway Board. At the same time, they should be got certified by statutory audit. Now, what is this 749? What is the format? So as I was making a mention to you, debt heads ka account, har ek debt head accounts, each debt head mein, what are the accounts heads we will be operating? So headwise, and balance at the end of the previous year we will show, and balance at the end of the current year under review, that also it will be shown. Whether that balances, only balances, not debit and credit, only balances, whether those balances, whether increased or decreased, and remarks also will be given. So this is the format. This you imprint in your mind. So this is the this is the debt head report format in which you should be prepared, and figures will be in thousands of rupees. And most importantly, nowhere our accounts officer will give certificates, but the importance of debtor report lies in that, to the fact that accounts officers will give certificates. Because I said efficiently, on the efficiency also we have to make a mention in the debtor report remarks. So whether we are maintaining them efficiently or not, how the board will come to know, or how the audit will come to know. So for that reason, we need to certify. When we are certifying, that means we are signing, then we will be very, very cautious. Maybe with that intention, these certificates need to be incorporated. Now, what is greatness in that? You will understand for the certificate what the accounts officer need to furnish, and they will also reflect हमारा काम कैसा करना with diligence, how we have to maintain our suspense or debt heads. So that is the most important point which we will be learning, because when we do that particular job and we knew that a particular certificate we have to give at the end of the year in the debt head report. So duly keeping these certificates in view, we will be carrying out our job. So they will guide us how to go about the maintaining the debt heads. One general certificate on the debt head report. There are so many other certificates. I will talk later on them. one general certificate, what we will be furnishing in the debt head report is that certify that the balances shown in the report agree with the general books and are supported by details. Now, agree with the general books. Now, you will understand that why a section officer of a suspense section will certify the balances, and then he will work out the balances and send it to the section officer of book section. So in the books, under that particular head, what is the balance available? And in the books suspense ledgers, whatever we maintain in the suspense ledger, the section officer of a suspense section, he is certifying that this is my balance, whether it is agreeing with the general books or not. So book section SO and the suspense section SO both will sign. Why? Because the PFA need to give this particular certificate, certified that the balances shown in the report agree with the general books. Not only that, I said the efficiency. So they are supported by details. That means no item is mentioned in this report without any detail, without having the details. You need not furnish the details, but you should have the details. So these details are available, that certificate we are giving. When you are supposed to give this particular certificate, it is needless to say that we need to maintain the suspense registers or debt head suspense registers with all details. So the report is also based on the analysis of the various balances. So what is that we will be doing? Well, let you know one by one. Now I was making a mention to you, after all, what are the, I was telling you that debt heads, loan, whatever we have given loans. So whatever we got money from other people. So what are these debt heads which we owe to others? So those balances, the organization should know, Railway Board also should know, our auditor C&AG also, they should know. Now, what are the debt heads which we will be maintaining? So these are, number one, F loans and advances. These F loans and advances under this sector, this F is a sector. F is a sector. We call it as a sector. So this under this sector, F loans and advances, these are the amounts that were given to the staff. Amounts given to the staff as a loan or advance. Say, for example, house building advance or PC advance. So these are all the advances which we will be giving. So when we give, how much we have given and how much we have recovered. So balance, how much it is available. So that balance of the current year will be comparing with the previous year, whether increase is there or decrease is there, that will be indicating in the debt head report. So under F loans and advances, under this sector, suppose 2-3 heads we operate, say HBA, that is one head we will operate, or PC advance, that head we will operate, or vehicle advance, if it is there, still it will be running recoveries. So whatever recovery are there, so what are the balances that are available, that we have to indicate. So under F loans and advances, these are all available balances we will be depicting in the debt head report. One important point is that F loans and advances, these loans and advances, they will not form part of the public account of the government account. These F loans and advances, they form part of Consolidated Fund of India. So that means whatever loans we are giving to our employees, these are made available by Parliament. By vote of Parliament, we will be getting the grant, and then that grant will be distributing to the eligible staff. And that will become payments in Consolidated Fund of India. Similarly, from our employees, we will be taking, recovering the money from our salary bills, from their salary bills, and those recoveries will become receipts in Consolidated Fund of India. So in the debt heads, this is the only sector which is having the vote of Parliament where receipts are shown, recoveries are shown as receipts, and the amounts paid to the employees will be showing them as payments. This is F, loans and advances. Apart from this, all other debt heads, which I am going to tell, all these I, J, K, L, M, and even N cash balances also, these will be available not in part 1 of the Consolidated Fund of India government account. They will be available under part 3. What is part 3? Public account. Under public account, you will be having these I, J, K, L, M, and cash balances also. These will be available. These are all the debt heads. How these will become debt heads? Let us see. I savings, say for example, I sector, under I sector, small savings. Small savings, say for example, SBF is there. It is our employees' money. We have kept under SBF. So suppose that claim comes, we need to refund them. Similarly, say Provident Fund. Provident Fund, this amount is whose money? It is not our traffic earning. So it is not a traffic receipt. So it is the money which was recovered from our employees, and we have to give it back to them as per the eligibility, and based on the claim, we need to give it back to them. So therefore, this is also comes under debt head. Now let us see J, reserve funds. J, under J sector, reserve funds. This will be available in public account only, part 3. Why public account? Because under J, reserve funds, whatever funds which we are creating, safe pension fund or DRF or DF, capital fund, debt servicing fund, RRSK, all those funds, they are kept with the government of India, and whenever we require, we'll be taking them. So that also will become debt head. Similarly, let us see one more sector under part 3, K, deposits and advances. These K, deposits and advances is the amounts which will be getting from the contractors. Suppose some EMD will be collecting. Is it railway receipt? No. And so for successful bidder, will be collecting security deposit. Is it our railway receipt? No. When the work is completed, we need to give it back to them. So this is also a debt head. So K, deposits and advances. So under that, what are the heads? What are the heads we will be operating? So that we'll have to list them in debt head. Then let us see L, suspense. L, suspense and miscellaneous. Now under this sector L, so many suspense heads will be operating. Most importantly, will be operating Reserve Bank suspense. These are related to banking suspense. So Reserve Bank suspense will be operating remittance into bank. Third one is checks and bills. Fourth one is deposit with Reserve Bank, or in other words, we call it as Reserve Bank deposit. So all this money, it is either due to government or due from government. So therefore, the banking transactions, the banks, they are due to government, say due to railways, or railway due certain money to them. So such amounts we will be having under L suspense. So that also will form debt head. So that so far we have learned F under Consolidated Fund of India. That sector is over. It is related to our employees, recoveries, and payments. Okay. Otherwise, in other words, we call them as civil grants. Now, under part 3, public account, we are having I, small savings, PF, J, reserve funds, DRF, etc. K, deposits, miscellaneous deposits, deposit miscellaneous, etc. SD, EMD, like that. And L, under L sector, suspense and miscellaneous, these are related to banking, because RBI is the main banker for government of India. So all that money, it goes, it is a receipt to government, and whatever money we take from that, it will be an expenditure to Government of India. So this is L suspense. Then apart from that, M remittances, because railway will deal not only with the banks, we will be dealing with the central government departments and state government departments also. So with central government department, PAO, through PAOs, we will get certain money, and then with AGs, that is state governments, certain money will be there. So under that also remittance transactions will be there. I already told you that even transfer transactions also, technically we call them as remittance transactions. So under remittance transactions, there are even transfer transactions also will be there, inter-railway, and other even cash balances also we have to certify under N suspense, we will be certifying them. So these are all the debt heads which will be operating. Now each one, let us go through and remember. So how an objective type question to be framed, it is left to you. Okay. Now let us see under debt head report. First one is F loans and advances, which is available under Consolidated Fund of India, Part 1. All loans which we will be giving to the employees like HBA, PC advance, they will become the payments, and whatever recoveries we make from the employees, they will become receipts to Consolidated Fund of India. Having known that, now what are all the heads, debt heads, which will be operating under sector F loans and advances? So a few examples you should know. So one is say HBA. So HBA. Now see the format: closing balance of the previous year, and if any TWFA is there, that TWFA will be there, and then closing opening balance. The opening balance it will get modified if any amount is there. So no amount is there. So the closing balance, it remains same. Now, what are the receipts that are available? So what are the receipts? It is recoveries, and the payments. Payments is the amounts which were sanctioned to the employees. Then what is the balance? That is CB of the current year. So from 842,000 crores, 8,42,000, it has increased 39,61,000. It has increased. So why increased? So some remarks we have to give. So this is how for each of the heads under F loans and advances sector, we have to compile. So that is the compilation which you are seeing. So motor conveyance, then other motor conveyance scooter, then personal computer, so PC advances, then total of F loans and advances. So this 3,92,98,000, it has become 3,29,56,000. So for that, under each head, debt head, we need to give explanation, and then apart from that, so with this, the compilation is over. Now you need to give, I said, apart from the general certificate, that it is tallying with the general books and supporting details are available for each of this sector. The accounts officer need to give a particular certificate. Now, what is the certificate? What is the certificate which an accounts officer will record for F loans and advances? Number one, certified that the recoveries during the year were made regularly. Now, what is meant by this? That means it is necessary for our accounts officer as well as personal branch officer to effect the recoveries regularly. That means they should not go beyond permissible period. So that is why we will be keeping a watch on the recoveries. If any recovery is not coming, immediately we will be writing letters to the executive, that is P branch, to effect the recoveries, and the amount which we have given, it will not become irrecoverable at a later date. So sufficient safeguarding whether available or not. So for that, one more certificate will be given. It is also certified that the balances have been analyzed and reviewed and there are no cases of write-off. When we will go for write-off? When there is no possibility of recovery. Suppose we are not taking sureties, then we have to go for write-off. Suppose he has gone without knowledge, he has gone somewhere and you are not in a position to trace, then you have to go for write-off. So that is one. And then doubtful assets. The money HBA sanction liye, but there is no land, there is no plot, there is no construction. So doubtful assets. Then grant of loan without a nominal rate of interest, grant of loans without necessary safeguards for recovery. Because if you don't have sureties, then you have to go right out in case the employee fails. Then unusual large loans. Normally, we will not give unusual large loans because repayment capacity we will see and then only we will be giving. So this is the certificate which we will be giving. That means sanctioning whether we are doing it properly or not. Whether safeguards are there or not. So that certificate also we are giving. And one more point, remember this very carefully. It is not that we satisfy ourselves. That the balances have to be accepted by the party. Suppose I took the loan. So some recovery was made. So what is the balance that is available? I should know. The employee should know. So therefore, the acceptance of the balances outstanding against the employee as on 31st March, whatever date is there, so have been obtained. That means a slip has to be given and then the acknowledgement has to be taken. This is the certificate which you give. Now, whoever are working in suspense sections, e-suspense especially, they will understand the importance of our activities. So this is all about L sector. Whatever heads, some 3 or 4 heads are there, HBA, PC, Scored Advance. So like that, what those heads and balances, how they are varying, and then remarks will be given. Next, let us move to second. Second one is I small savings. I small savings, in that prominently PF we knew, but this is GPF. What is the CB? Similar way, similar fashion. So CB and TWFNE is there, qualified, then CB will arrive at, and then receipts, that is the recoveries from the employees, and payments, the payments made to the employees, and what is the balance that is available. So this is GPF. GPF is related to audit people. GPF is related to audit. Then state railway provident fund. So this is CSRPF and CSRPF. Now there is no CSRPF. So this is the NCSRPF amounts. Then so this is total of the PF. Then group insurance, insurance and pension fund. So saving fund and pension fund. So what is the amount that will be? So that amount will be there, and then total of the saving, I small savings. So that total will be available. So this is about I small savings. Now what is the certificate which we have to do? The certificate to be furnished is certified that the balances at the end of the year, as per the general book, agree with the total balances of the individual members, total, not individual. So total of the individual members as per the personal ledgers, and advice slips showing the balance, which is otherwise we call them as PF slips. At the end of the year, we used to give PF slips to them, and there also we'll make a mention. If you find any irregularity, you please bring to our notice for correction. So issue to them. So that is the certificate which will be giving. Now, are you giving? Most of the railways, they slipped this and they started PF passbooks. So we are asking, instead of we giving to them, and we are asking them to bring the passbook and get printed in our office. So, but the code provision clearly says that the PF slips should be issued to them. Okay. So this is another certificate which we have to submit it to our as a part of debt head report for I small savings. Now what is next one? J reserve funds. Now what are the funds? So the format is one and the same. Now, what are the funds, J reserve funds, which we will be maintaining? Number one, DRF, then development fund, then capital fund, then pension fund. Pension fund, remember them very carefully. DRF, DF, CF, pension fund, staff benefit fund, safety fund, RRSK, and with that, total. Why I am telling you in detail is that you should know under J reserve funds, what are the funds that will be maintained, will be operating, where we need to give debt head report, the variation between the closing balance and the opening balance. Only balances. Why increase? Why decrease? The reasons we have to furnish in the remarks. But for J reserve fund, there is no certificate given in our accounts code. Next is K deposits. K deposits and advances. What are the K deposits and advances? Number one, NPS. If any deposits are there, that we have to keep that. And then Indian Railway deposits. That means our security deposit, deposit miscellaneous, whatever total SD, EMD, deposit pension, deposit PF, deposit works. So all those deposits will be under this. Then Indian Railway advances, departmental advances. For here, departmental advances means the amounts which normally we will be giving for a local purchase to the executive departments for making a purchase. Once they do the purchase, then the amounts will be nullified, and then a proper accountant they will give, and they will be nullified. If any amount is lying under K deposits under this caption, then that means to that extent they have not given the account. That is why it is remaining. So we have to give a certificate, and then we have to reflect that under K deposits. So total K deposits we will be writing, and then a certificate need to be given. What is the certificate we need to give for K deposits? Certified that action has been taken for the clearance of the items outstanding for more than 3 months. What is the action we have to take? You have to write to executive that so many items are pending. So please, if work is completed, please send the pay orders. So like that we have to do. So for that reason, whatever we are doing daily action, because we need to give this certificate, certified that action has been taken for the clearance of the items outstanding more than 3 months. So that means for every 3 months, you need to send a letter to executive. So out of the works, if any completed, then EMD has to be refunded. Security deposit to be refunded. Or deposit works, it has to be refunded. Work is completed, then refunded. Or any extra money, it has to be collected. So this is the certificate which will be furnishing. So I, J, K, it is over. Now L suspense and miscellaneous, I said it is banking transactions. So from PO, central POs, whatever amount which we have to collect from them. So that PO suspense, AG suspense. From central government ministries, how much money is due, that we have to show. And from AGs, different state AGs will be asking them to give remit in cash. Suppose if they are remitting, then it's okay. Otherwise, it will be reflected in this DHR. So this much money is due from state governments. This much money is due from central POs. Then PSBs. PSBs due means under remittance into bank, if this much amount of due means that much money has not been given to railways. And PSB suspense, checks and bills means that means this much money has not been cleared. That is not put in the railway fund. So this is the aspect which we have to. And then one more thing is Reserve Bank suspense. But in the Reserve Bank suspense, most importantly, we have to observe that at the end of the year, no balances should be there as per codal provisions. If any balance is there, that balance we have to transfer it to MAR or deposit miscellaneous. At the end of that means without adjusting that, RBS should not be left with the balance. So that is why we have correctly made it 0. There will be receipt and there will be payment, but at the end of the year, no balance should be there. If any balance is there, I might have transferred already to either MAR or deposit miscellaneous. That is how we have to see under Reserve Bank suspense. Then miscellaneous suspense, okay, leave it. Then total, it is there. And then one more, checks and bills. What is the balance? And remittance into bank, what is the balance? Checks and bills, unencashed checks amount, and remittance into bank had to be adjusted, especially minus or 0 entries. We should be very, very careful, and then explanation need to be given. And the departmental balances, this is the amounts that are given to our railway officers for local purchase purpose, and permanent cash impressed. The permanent cash impressed is the cash impressed given to our executives. How much balance is available? This cash impressed, if you remember correctly, on 31st March, we'll be asking executive to certify how much actual cash is available by count. Not only that, we also will go to cash office and each cashier how much cash is available, and sum total of all that will be reflecting here. And then RBD, Reserve Bank deposit. So Reserve Bank deposit, how much money is available. So that much money either we owe to Government of India or Government of India owes it. So this, whatever amount is there, it is a receipt to government. If it is an expenditure, it is an expenditure to government. So Reserve Bank deposit amount, it will be closed in that way. So this is total L suspense account. It will be completed in that head. But what is the certificate which we have to give? See, certified that the cash balance actually in charge of the cashiers and departmental officers of the 31st March was so much rupees. So that should tally with the departmental cash. Then with cashiers, certified that cash balance in the hands of cashiers or verified actual count and found correct. So that will be reflected there. So these are the certificates which we have to furnish. Then M remittances. So I, J, K, L we have seen. Now we are coming to M remittances. Here, what are all the heads that are operated? See, I said technically our transfer transactions are also treated as remittance transactions. So now you can see transfers within the same railway. Within the same railway means intra-railway. So intra-railway always should be 0. I was making a mention to you. So now it has been 0. That means there will be receipts, there will be payments, but in the end, it should be 0. That means all the transactions of this particular railway, that railway has adjusted to final heads. This is the beauty of this deadhead report. Then adjustment with P&T. That means the RBI still has to adjust. So still balance is available. Adjustment with defense. So still amount is available. So RBI still adjustment need to make. Then account between railways. What is account between railways? Inter-railway, where transfer railway head is operated. That is 87-97 will be operating. And this indicates that there is a balance. Always zonal railway will close to government. And in railway board office, this account will be closer to balance. So when you read account current, all these things, it will be helpful. Okay. So total M remittances you got. So for M remittances, what is the certificate which the accounts officer has to give? Certified that the outstanding balance represents the amount which settlement could not be affected in the Reserve Bank during the year. That's all. These are the certificates which were, so this is how the debt head report has to be framed. And certificates have to be given. In addition to that, I said that 10th March, we have to give advance copies. By 25th September, 10th September, we need to give advance copies, and 25th September, audited copy should be sent. Now, what is the, so many certificates we have given from our accounts side. Now, what is the certificate the audit will give? Audit will give like this, certified that as a result of the test audit of the accounts compiled under the direction of the general manager, that subject to the observations, suppose some mistakes they have found, they'll give those mistakes. The review of the balances for the railway, so and so year has, to the best of my knowledge and belief, have been correctly prepared. So this is the certificate which we will be getting, and this certificate and along with the certified debt head report, it has to be sent to Railway Board by 25th September. Okay, so this is all about debt head report. Hope you understood. And now let us move to half-yearly suspense review. So this half-yearly suspense balances, this is the managerial information which we will be giving from each zonal railway or from each accounting unit. It will come to headquarters, and from headquarters, zonal railway as a whole, they will be sending to Railway Board for each half year. We will make a review. Of course, it doesn't mean that every month we want to do suspense review. Every month, the accounts officer and section officer, their responsibility is to see that suspense accounts are maintained very efficiently. That always we will do. But for a managerial information, half yearly, how much amount we are, how much for every half year ending, what is the balance that is available, and how that balance is compared with the previous 3 half years, not 1, 3 current half year, previous half year, and previous half year. So three half year balances we will be comparing, and then we will be explaining and what is the action which we would like to take to bring down the balances. Suppose some mistake we found during this review, immediately we will note it, and whatever current month accounts are there, we will rectify them. That is the importance of this half-yearly review. But in your mind, you may be getting a doubt. Sir, debt head report we are giving once in a year with all the certificates, and audit is also giving a certificate. Why half-yearly review is required? Yes, that half-yearly review, because every year, every month we will be reviewing. But Railway Board wanted that once in a half year, the balances should be shown to Railway Board. Managerial information we have to furnish. If board decides that no, there is no need for you to bring, yes, definitely it can be dispensed. Which one can be dispensed? Half-yearly review of suspense balance can be dispensed if board desires, but not debt head report, because in the debt head report we are giving a certificate, and it is a mandatory for audit also to certify, and the debt head report is a part of annual account, so it cannot be nullified. Whereas half-yearly suspense review, if board wants, yes, it can be nullified. Now, before going to the suspense half-yearly review of suspense balances, now what are the suspense heads which we will be operating? Most important. So, and what is the purpose? So, based on the purpose, what are the suspense heads which we will be operating? Number 1, accounting of earnings and expenses to serve as a link between commercial accounting and government accounting. In my first class, I told you that 2 heads on earnings side, they are operated. They will be having debit balance. What are they? Earnings side, to serve as a link between government accounting and commercial accounting, we will be operating 2 suspense heads. One is traffic account, another one is demands recoverable. Traffic account is for traffic receipts. Demands recoverable is the amounts that are to be realized by divisions. To keep a watch of the realization, these two are heads are operated. And on expenditure side, two heads are operated. What are they? One is demands payable and another one is labor. Demands payable and labor, these heads will reflect the amount that was spent, but the liability not discharged. That means payment was not done. I told on that day that the best example is, say, for demands payable, March salary. March salary, it has been spent. That means it has been booked in the final head, but not paid. So when not paid, we have to keep a watch, because in the government accounting, we need to give only the amounts that were paid on cash basis, actual payment. So when actual payment not done, so to that extent, we have to reflect in our account current, and then that suspense has to be taken out, and then the remaining amount only will be showing our ordinary working expenses. And labor in workshops. So these two heads on earning side, two heads on expenditure side, these are operated as linked heads, but these are also suspense heads. Next, to effect a reconciliation with the reserve RBI. What are all the things which will be operating? All L suspense, RBI, M remittances, RBI, defense and postal, M remittances. Then L suspense, RBS, there are four heads. I already told you. RBS, Reserve Bank suspense, checks and bills, RIB, remittance into bank, and finally, deposit with Reserve Bank, or RBD, Reserve Bank deposit. These are the heads which will be operating to effect the reconciliation with RBI. Then another one is cash advances made and deposits received from various parties. So this categorization is based on the utility. So when cash advances are made, where we will be keeping a watch? Under miscellaneous advances. If it is a capital, miscellaneous advances, capital. If it is a revenue, miscellaneous advances, revenue. And deposits, security miscellaneous, deposit miscellaneous. Under deposit miscellaneous, umpteen number of heads are there. Right from starting from your EMD, security deposit, PF, pension, DCRG, your establishment deposits, and even books also will maintain a deposit. Okay. Then inventory comes. Inventory, it is a plethora. Plethora mane to heap. Number of suspense will be operating. Right from stores itself is suspense. Purchases, sales, stores in transit, stock adjustment account. Like this. Miscellaneous advances capital, WMS, workshop manufacturing, and name anything, there is a suspense. Then, to accommodate an item when details of the allocation are not known or acceptance is awaited, we will be keeping somewhere. It is under miscellaneous advance or deposit, miscellaneous deposit. So this is the categorization of suspense heads based on the utility. Now, based on the nature of the transaction, same under revenue. Under revenue, what are the suspense heads which we operate? Demands payable, demands recoverable, miscellaneous advance, traffic account. Under capital, stores, purchases, sales, stores in transit, stock adjustment account, miscellaneous advance, capital. Here it is capital and here revenue. Workshop manufacturing suspense. Then debt heads, which already we saw. Loans and advances, HBA, conveyance, etc. Deposits, deposit miscellaneous, unpaid wages, etc. Then remittances. Under remittances, Reserve Bank suspense, remittance to bank, checks and bills, payment accounts office, PAO, AG suspenses, and remittances with reference to postal and defense. Postal and defense remittances, they will be adjusted by RBI. So these are all the remittance heads. Having known these suspense heads classification, now let us straight away go into the half-yearly suspense review. Half-yearly suspense review, this will be carried out just like debt head report, how it is carried out head of account wise. Here also head of account wise, half-yearly suspense review will be done. Debt head report, it was done in to end of the year, but here for 2.5 years we will be doing to end of March and to end of September. So to end of March, anyhow we will be doing for DHR, and here also same extraction we will be making for half-yearly suspense review for March, and in addition to that, and for September also we will be sending. Second half year. So first half year for March, whatever we are preparing half-yearly suspense review, we should send it to board by 31st May. By 31st May, we should send. And by September, whatever half-yearly suspense review we are doing, we should send it by 30th November. आखिर उसमें क्या रहता है? Where, what is that? It will be available. Number of items over 1 year old. Over 1 year old ka, because we should know. So therefore, over 1 year old for 3.5 years will be current half year, previous half year, previous to previous half year. So 3.5 years will be indicating number of items. Similarly, amount also for over 1 year old items. Then number of items less than 1 year old, lump sum, one figure will give. So the amount and the items total, if you add, then you will get total balance to the current year. You will be getting. And last half year already it is there, so you will be comparing. Then the reasons what we have to furnish is for non-clearance of the balances and steps taken, why the balance is lying and what are the steps you are going to take, because it is a managerial information. So you need to spell out very clearly. So this is what we call it as half-yearly review of suspense balances, head of account wise. Now this is the format. So what is the format? This is A620 accounts code, 6th chapter, 28th paragraph, A high. This is half-yearly suspense review, head of account wise. So head of account, MER, MAC, deposit, like that it will be over 1 year old, last 3.5 years. This is number of items, and here amount and total amount less than 1 year, and items and amount. So total amount is half year amount, 7 plus 8, it will give total amount for the current year and reasons why there is a increase or decrease. So this is how the head of account wise it will be given. Then we one more statement for half yearly suspense review we have to make. It is year wise. So year wise. So year wise, current half year, items more than 25,000, number of items and amount, and items not more than 25,000, that is less than 25,000, number of items and amount, current half year, previous half year. Then the debit items and credit items, separate statements we have to make. So in that A620, we have to give year-wise statement. Now this is how it looks. So year-wise, 2019-20, 2021. So I took for debit items. So items current half year, items over 25,000 and less than 25,000, number of items amount, number of items and amount, and previous half year. Now comparison we have to give, and what are the steps you want to take, that you have to do. So the review should furnish the reasons for increase in the balances compared to the previous half year. Half year, current half year, previous half year. Why increase is there? Year wise also you have to show. Then cause wise analysis of the suspense balances we should give. Wrongly included items, if any, this should not be there. You should go to some other suspense head, or you should go to final head. If you notice, then note, jot down, and then immediately you put up in the current half year. Then you can mention in the remarks column that so much item has been noted for adjustment. That also you can give. And relevant board communicates action to be taken on areas to be concentrated. Sometimes they will get a scathing letter and then we have to give a reply. So a feedback on the action taken has to be sent to relevant board. Dear participants, so with this, I conclude my session, and I am open for any queries or doubts on this debt-head report and half-yearly suspense review. And I request you, all of you, to prepare your own questions and answers from this presentation, because we do not know from which nook and corner the question will come. So get prepared for that. I also suggest after writing, you read, because I gave you the chapters also, 7th chapter and 6th chapter of accounts code. Please go through and then make out your own questions and answers. That is the most important part. Thank you. I am open for queries. Yeah, someone has asked me about stores and WMS. Mr. Benher, you can unmute them. So someone asked me about this stores and WMS balances. Stores and WMS balances, most importantly, stores in stock. Yeah, Nashgar, you can unmute.
Can I unmute all the participants?
Yeah, please.
Yeah. Yes, sir, all are unmuted.
Okay.
Yeah, participants, please interact with the faculty.
Yeah, if any doubt is there, they can ask. So in between, I am trying to explain. There is one in chat box. One
Or you
person.
can message in the chat box also.
Yeah. Stores and WMS, these are two interlinked suspense heads. Suppose we purchase certain items for workshop manufacturing suspense to be given to workshop. Then the same thing, that means where who is the user? User is workshop manufacturing suspense. That is the debit. So debit will be there with the workshop manufacturing suspense, and contra credit will be there for the stores. So issues will be there for stores, and the same amount debit will be there in the WMS. Similarly, from WMS, if certain manufactured item is given to stores, then again vice versa, things will take place. These are direct entries in the stores and workshop. But most importantly, the items when you review, that is about budget aspect. But as far as when you review, the most important point is that in WMS, wherever the amount the work has been completed, the outcome statement part 1 is there, then immediately raise the debits to the concerned unit. So you should ensure that the balances under WMS are less, and under part 2, only the items for works in progress they should be available. And with regard to the stores, the most important part is that it is the amount that has to be at low inventory, high level of efficiency should be there. That is with that motto. That means inventory turnover ratio lesser and lesser if you keep, then your stores balances are you are maintaining very significantly, very diligently. You are making these stores balances. So with that, now I will go to Mr. Singh.
Please unmute.
Sir, namaste.
Namaskar.
Sir, ये transfer without financial adjustment.
Transfer without financial adjustment. Okay. Actually, I should have told you in my transfer transactions and remittance transactions. Over time nahi tha. Actually, it is a good question. Actually, transfer without financial adjustment mane to, especially our in transfer transactions में हमारा जोनल रेलवे से दूसरा जोनल रेलवे को ट्रांसफर करने का इंटर रेलवे ट्रांसफर ट्रांजैक्शन और इंट्रा रेलवे विद इन द जोनल रेलवे दैट इज एक जोनल रेलवे में डिफरेंट अकाउंटिंग यूनिट्स के बारे में ट्रांसफर्स होते हैं. ऑल दीज विल बी डूइंग बाय राइजिंग ए टीसी, विल इश्यू ए टीसी and then JV also will be prepared, and these transactions we call them as financial transactions, financial adjustment. These transactions will be doing financial adjustment. That means we will see budget is available or not, then we will prepare JV and then we will book it to the final head. This is how it will be done. But whereas a TWFA, because you may have seen in my debt head report, only the closing balance getting altered. Closing balance हमारा लेजर पे क्या था और TWFA कितना अमाउंट दूसरा यूनिट ने हमारे को बताया, अगर है तो then closing balance will be increased or decreased. That's all. So this kind of adjustment we call it as TWFA, transfer without financial adjustment. आखिर under what circumstances? I already told you under what circumstances we should do financial adjustment. But under what circumstances we should do TWFA, transfer without financial adjustment. हर एक चीज को हमें ऐसा कर सकते हैं क्या? No. There is a particular procedure to be adopted for doing this TWFA. The unit from which we are going to get the transaction, that has to tell to railway board, and the unit also to which that head is going to be affected, that unit also should agree for affecting the TWFA, and the originating railway, with the acceptance of the receiving railway, they will send a proposal to railway board, and in the month of March, we will be affecting this TWFA. So how we are doing here? JV, no JV will be prepared. When you prepare JV, then there is a budget requirement. Here, there is nothing required because already those transactions took place with the budget approval, with the parliament approval only we are done it. Only thing is we are transferring from one accounting organization to another organization we are sending. Then in such case, only the opening balances need to be adjusted. That's all. In our ledger, these adjustments have to take place. I will tell simple example so that you can understand about TWFA. Say, for example, our core organization, it is headquartered at Allahabad. So, Central Railway Organization, Railway Electrification. So, this core organization, they will affect, they do the job, say, on a particular zonal railway. Say, let us say on, say, NER, it has done some job. Like SCCR, okay, let us take SCCR. On SCCR, they have done electrification job. So, to that extent, they have incurred that expenditure. When they incurred that expenditure, under which plan head they might have done? Under 3500. So, under 3500, they got funds. How they got funds? They projected and parliament approved. So, they got the funds and they executed, they completed the project. Let us imagine they completed the project. But is that project pertains to core Allahabad? No. Where is the asset? Asset is done, asset is improved. Where?
SCCR.
Yeah, SCCR. So SCCR, if you take the block account, that block account will show less amount only because already electrification over. Suppose they remain like that only. The amount remains with core only. So the SCCR will show with less block amount. They are showing the better picture. They can show better picture. But it will not show correct picture of the expenditure of that particular SCCR, because to the portion of the railway electrification, it is available in core. So from core, it has to be transferred. When they will transfer? They will transfer upon drawal of the completion report. Upon not only drawal, it should be sanctioned. So once the CR is sanctioned, they should not keep that amount under their books. They should immediately write it to SCCR, PFA. At the same time, they should write it to railway board also. They should take acceptance from SCCR, PFA, and then that acceptance also they should communicate to railway board, and the railway board will say, yes, you effected TWFA. Then they will send what are all the completion report balances are available, expenditure is available. Those heads they will give to us, to SCCR. So SCCR in the ledger, just like in the DHR I told you, so in the opening balances, they correct it. So when they correct it, their balances will increase under that particular head. Then their accounts will show correct picture. This is how the TWFA is affected. Without budget is already it is there. So without financial adjustment, we are doing the increasing the balances. Not only this, one more small example I'll tell and I'll conclude. Previously, we used to have contributory provident fund and non-contributory provident fund. So this contributory provident fund people, they were given options to come to NCSRPF, that is pensionable employees. Some people they opted. So the payoff balances, whatever available, they have to be brought to NCSRPF from CSRPF. So that CSRPF amounts, when I bring to NCSRPF, I will affect them with TWFA, transfer without financial. I will not make any JV. Without making JV, I will adjusting. So these are the entries which are permitted by railway board, and for those transactions only we will be operating this TWFA. Singh, I hope you understood this particular concept.
Thanks, sir. Dhanyavad.
Okay.
So, what are the accounts of with Pakistan Railway and Bangladesh Railway under L suspense?
There are so other, because pre-partition amounts will be there. So that is why still we are having such transactions. They are there. So we will be watching them. So
any further queries, please? Any queries?
Yes, suspense again, sir. Yes.
Any queries, please?
Hello.
yes, please.
सर एल सस्पेंस एक बार फिर से बता दें सर.
इसके बारे
एल
में
सस्पेंस एल सस्पेंस एल
कोई क्वेश्चन पूछ रहे क्या?
साहब एल सस्पेंस के बारे में
जी जी
एक्चुअली एल सस्पेंस इज मोस्टली इट इज दे आर रिलेटेड टू आवर बैंकिंग ट्रांजैक्शंस. उसमें 4 हेड्स हमें ऑपरेट करते हैं. एक हेड होते हैं RBS, रिजर्व बैंक सस्पेंस. हमारा पेंशन पेमेंट्स करेगा बेस्ड ऑन आवर PPO. बैंक वाले हमारा पेंशनर्स को पेंशन पे किएगा, मगर बैंक्स को पैसे कौन दे रहा है? हमें देना है. बेस्ड ऑन द डेबिट स्क्रॉल्स the banks will advise to RBI. From RBI, they will be doing, there is our railway fund will be there. हर जोनल रेलवे को एक फंड RBI के पास रहता है, सेंट्रल अकाउंट सेक्शन RBI नागपुर के पास. सो जिस रेलवे का पेंशनर्स का पेमेंट किया है, वो रेलवे का फंड से बैंक को दे देते हैं, हमारे को एडवाइस देते हैं. सो दैट अमाउंट it will be finally when from scrolls, when we get that debit will give to 13L and credit will be keeping under Reserve Bank suspense. ये रिजर्व बैंक सस्पेंस कब क्लियर होगा? तब ये रिजर्व बैंक एडजस्ट करेगा, हमारा रेलवे फंड से बैंक को पैसे देते, उन्हें एडवाइस देता है, क्लियरेंस मेमो देते हैं. So when they give clearance memo, we will be the credit whatever it is available in the RBS, it will be debited to RBS based on the clearance memo, and RBS will be nullified, and that amount will be available in the RBD. So this is how first under L suspense, that Reserve Bank suspense, that is one account which will be operated. And as already I told you in this session, that Reserve Bank suspense at the end of the year, we should ensure that balances will be there, but that balances should be carried to either MER or deposit miscellaneous, depending upon the balance which it is having, and that should be made zero at the end of the year. So this is the all about RBS. Next, second one is remittance into bank. Under L suspense में remittance into bank. Remittance into bank, when we will be operating, when our cash is deposited in the banks, till to watch that the amount whatever we have deposited in the bank, it has been created in our railway fund. To that extent, we will be watching. So that for watching will be all our cash from CR note, from treasury remittance notes, whatever amount we have deposited in the bank, or through challans, whatever amount we have deposited, till it has been accounted in our railway fund with Reserve Bank of India, Central Account Section, Nagpur, we will be keeping a watch. That RIB. So RIB purpose is that. Then another one is under L suspense only, the third suspense head which will be operating is checks and bills. Checks and bills is for payment. So this payment, whenever you are making payment in the CO7, you will be giving a credit to checks and bills. So when payment is arranged, the banks will give us the debit scroll, and then to that extent, the PSB will be operated, and then RBD also will be operated based on the Reserve Bank clearance memo. So this is how to watch the payments arranged by the railways, and to know how much uncashed are available. So this suspense head checks and bills is operated. So RBS, remittance to bank, Reserve Bank suspense. But in any of these things, one more head which will be operated, it is Reserve Bank deposit. This is nothing but the replica of railway fund which is maintained by our Reserve Bank. So either debit or credit, both will be there for Reserve Bank deposit. So this Reserve Bank deposit, which is maintained in our railways, it will be compared with the statement, one statement they will give, who RBI Central Account Section, it will give to PFA office. So PFA office, that means headquarters book section, they also compare with the RBD, debit and credit. Whatever debits and credits given by RBI, whether the balances are agreeing or not. If not agreeing, then immediately we will dig out kuch na kuch problem hua to we will rectify them and see that our balance and RBI balance they tally. So this is these are all the four heads which will be operating suspense L under L suspense. Sector L में suspense में DHR banking के transaction के बारे में हमें यूज करते हैं.
रेमिटेंस टू बैंक में आप सबसे पहले डेबिट होगा ना सर, आपने बताया क्रेडिट होगा, ये डेबिट होगा ना?
RIB को डेबिट होता,
डेबिट होगा,
एंड चेक्स एंड बिल्स को क्रेडिट होता,
क्रेडिट होगा, चेक्स एंड बिल को क्रेडिट होगा. ठीक है, ओके, धन्यवाद.
थैंक यू. Benher, we will close because they have to go for chai and.
Yes, okay, sir. There are no further doubts. We'll end up this session. On behalf of IRIFM-II Hyderabad, I thank Shri K Damodar Prasad, sir, for taking the session on credit report and suspense reviews. Thank you, sir. Thank you so much. The next session commences at 11:45, and the topic is completion reports, bills received, recoverable, and also work registers. Okay, next session starts at 11:45. I request you all for break for tea and come back by 11:45. Thank you all. Thank you, sir.